get a home loan when you don't have no credit, zip, nada. You don't have any credit and you want to get a loan to buy a house. In this show, I'm going to show you 3 ways how you can buy a house when you don't have no credit. Get ready, and you are going to be owning a house before you know it.
Thank you for participating in another episode of Saturday's Foreclosure Exposure, where we help you become an even better home investor and home buyer. Your host, Fernando Herboso, an investor, an author, entrepreneur, and broker owner of Maxus Realty Group for Maryland and Virginia. Please welcome Fernando Herboso once again to another episode of today's Foreclosure Exposure.
Hi everyone, this is Fernando Herboso with Maxus Realty Group, and today, yes, we're talking about how you can purchase a home, get a home loan to buy a home. I'm going to give you 3 different ways. I'm going to give you 1, number 2, and the third one's going to be the best one I think you're going to like. But first of all, I want to make sure you understand what we're trying to do. Always, it is a good idea to maintain a good credit in order for you to be able to buy a house. This is for people that are looking to buy their house for first time, or the people that they cannot buy a house and they've been waiting because their credit just simply sucks. And I want to make sure that I'm going to give you these 3 different ways how you can possibly buy a house now without having to wait until such a day when everything is going to be great on your credit. So let's get started with option number 1. Option number 1 is already a known option that everybody knows about it. You know it, you just don't want to admit it. And this is something about your credit needs to be repaired. That is the part that you already know. And it's when you hire a company and they come to your credit and they go over there and dispute some of the things that's going on inside your credit, but you have to pay money to the credit repair company that is doing this work. Just make sure that you have a very good company, somebody who actually repairs credit, and they're not just trying to recruit people and other people to help people to recruit more so they can have the appearance that they want to repair credit, but in the end, nobody gets help and everybody gets money. And you are going to be broke still with bad credit. So make sure you find in the right company, the right person to help you repair your credit. They're going to dispute some of the things that's going on in your credit with the bank, and the bank gonna have to remove them because they have to provide proof for those things. There are ways how to do this, and this is something very specific when it comes down to doing this dispute, so they can erase this bad credit from your history. So those are the things that are very important, that you find a company that will be able to do that for you. And then after about 2, 3, 6 months later, maybe your credit is going to be now on the mid 600s, which that is really where you want to be in order for you to take advantage of the great rates that we have right now to buy a home. Right now, you can buy a home for less than 3%. So it's a great time to be able to get this loan, but you have to have a credit score around the 640, 650 range or higher in order for you to do that. So the number 1, very important, find a reputable credit repair company and start working on your credit. You already know that. Fix your credit and then buy a house. Number 2, let's talk about number 2. Number 2 comes when it is about other people that may be able to help you buy a house. This is the time. I'm not talking about somebody that's going to co-sign for you, because usually when the banks try to do a loan and somebody's co-signing, they take in consideration many more things. And then at the end, when the 2 applications, your application and the people that's co-signing, they put together, your application doesn't look so good. And more likely, they're not going to give you the amount of money that you're looking for, and they're going to ask for a lot more down payment. And sometimes that's not beneficial to you, because not only you're interfering and imposing on a family member to do that for you when maybe it's not a good time for you to buy a house. What I'm talking about is finding, if you're the person lucky enough to have a father, a mother, or an uncle, or a friend who has money, maybe your boss, they want to invest with you to buy a house where you are going to make the payments. But at the same time, they're gonna be included on the title, so they can making sure they're gonna be protected. So in case that you do not pay, or you end up in the hospital, something like that, they can basically take over the house, and you can actually, basically you're gonna be out of the house, and they're gonna take over the house, and they're gonna be able to sell it or put somebody in there who will be able to help them pay the rent. That way, they're protecting themselves, but at the same time, you also getting a chance to be able to get you're in front of a door of a house where you're going to be able to make the payments necessary to keep the house for you while your friends helping you buy this house. Then after about 2 to 3 years, once you repair your credit, once your situation is much better for you, then you can possibly do a loan specifically for you, like a refinance, where you can drop that person off the loan and you become the principal person, and that is all you need to do. So this is about finding somebody who you can trust, somebody who can trust you, and you're fortunate enough that you have a family member, they have the means to be able to do this, and making sure you tell them that in case you cannot pay for the house, they have the option to kick you out of the house, so they can either sell it or rent it to somebody else, so they can have the money to pay for the house. It's about giving them control. It's a very important thing that they need to know, that because a lot of families got burned. A lot of families, they have problems with that because they co-signed for somebody, the person lost their job, or they got in an accident, and now the co-signer has to pay 2 payments, and that person remains on the house, and that is when the friction begins, and that's when everything just goes to everywhere, and then basically it's not a good result for anyone in there. So it's about protection, and that's very important. So now we're going to talk about number three, which I think is very important, that you need to understand a way how to buy a house when you do not have good credit in this moment. And this is about a rent with option to buy. Some people call it lease with option to buy. This is basically a way how to have a 2-year window, maybe a 3-year window, where you're fixing your credit, fixing your problems that you have that is keeping you from getting a loan at this moment, and rent that house. Then after 2 to 3 years, then you can purchase the house to a predetermined price, where you are going to make a contract with the seller. So let me explain to you a little bit what a lease option is, a rent with option to buy, which means that you are going to have a contract that is a dual contract, meaning one contract is going to be about renting the place for the next 24 months, if it's going to be a 2-year window, and you're going to make certain payments every single month, just like a regular rental. You're going to make those payments, and at the end of the 24 months, you have the option to purchase the house. That's when the second contract comes into view. The second contract is a contract to purchase the house, and you're going to make the contract at the same time you're making your lease option contract. So that's 2 years in advance. You're going to make a contract saying, I want to buy this house for this much money, and we're going to do the closing on such and such a day 2 years from now. So everything is just like a regular sale. You're buying a home. It's just the closing date is going to be 2 years later. So now you have those 2 options. You're going to have the option to rent the house for 2 years, and after 2 years, then you grab the contract where you have the option to buy it, exercise your option, and purchase the property. The seller cannot change their mind in selling the property to you because they are accepting that price. You are the one who has control of the contract to purchase the property or not at the end of the rent with option to buy. You make the decision that you want to be the person, that you want to make the decision at the end, so you can protect yourself. So let me give you some case scenarios how this thing may work for you. So let's say that you're buying a house for $300,000 2 years later, and you're buying a home maybe because this house is around, maybe there's a new metro station being built close by, or there's a big factory that's coming very close. They're going to be hiring a lot of people. So you know that property is going to go up in value above the normal in the next 2 years. So let's say your option to buy this home is $300,000. And then when the 2 years come and you're ready to buy the house, if the house is worth $350,000, the owner, the seller, he cannot change his mind. They have to sell it to you for $300,000. And you just made yourself $50,000 because you bought the right property at the right time in the right place. That is a great way to benefit you. But what happens if it goes the other way around, where you bought a house and the neighborhood just went wild, something happened, property values dropped down, so 2 years later, you come over here and the house for $300,000 is only worth $280,000. So then you go, obviously you're gonna say, I do not want to buy this house because it's not worth it $300,000. So you exercise your option not to buy the house and you can get out. The caveat here is this, that in the contract that you have to rent the house for those 2 years, this is not a regular contract, just like a rental. You know, in a rental, you may pay 1 month's deposit and the first month's rent, and then you can move in. So let me give you an example of two different houses. A house that's $2,000 a month for rent, normal rent, where you pay $2,000 deposit, $2,000 first month, and you can move in with $4,000. And that is a regular lease that you may find. If you find a same house just like that one, same size, same scenario, but this is going to be a lease with option to buy or a rent with option to buy, just because you're getting this benefit that you can buy this house 2 years later, the rent may possibly be more than what you're going to be paying by renting the house. It could be another $200 more or even $500 more a month. That's one thing. You're going to be paying more per month. Another thing is that if you're renting the house as a normal rent, if something breaks on the house, you call the landlord, they come in, they fix it, and that's that. When you're doing a rent with option to buy, the owner of the house is going to expect you for you to do the repairs on the house because they're going to say, it's your house, you're buying it, so you repair it. So that's another way where how this is going to cost you more money at the end. Now let's talk about the deposit. On a regular rent, first month's deposit and the first month's rent, that's all you're going to need. On an option buy, on a lease with option to buy, they may require you to pay up to $10,000, sometimes even higher than that, $15,000, depending on the house, depending on the price of the house. So you have to put that money up front to buy this house. And obviously, the negative of this is that after 2 years come and you're ready to buy the house and you decided, nope, I'm not going to purchase the house, you're going to lose that deposit. So you got to be very sure that during the years of your option, you got to make sure you're fully prepared to get a loan to buy the house and making sure you're going to be protected that way so you don't have to lose that much money. So what happens if at the end of 2 years, you go and try to get a loan and the bank says, no, you don't qualify for a loan, I'm sorry. That means that you're not going to be able to go through the process, and simply is that the seller will basically take the property back. They're going to find somebody else and they're going to take your deposit because you interfere with the sale of the house. It's your responsibility to making sure that during those 2 years, that is the lease option, you are going to be ready to buy a home, and whether you're going to fix your credit or fix your income or anything needs to be done. So there are many ways how this thing can benefit you, and there are many ways how this thing may be a negative thing for you. This is not for everyone. You have to be in position to buy 2 years now. You have to have a stable work, good income, and making sure that you have a chance to fix your credit so you're ready to buy a home. Now, in other cases, sometimes we see that people that they may not have social security numbers, they have only tax ID, they can still purchase a home, but they require a higher down payment. So this is a very important and very iffy situation. If a person that is getting a tax ID loan, those loans are very hard to get. So making sure that you can qualify for you. So one more thing I just want to tell you about that's super important is that when you're doing this negotiation with the rent with option to buy, you can negotiate for the seller to give you some of the money back that you pay for the 2 years when you rent it, so it can help you get enough down payment to buy the house 2 years later. Let me explain to you. Well, you can say, I want you to refund to me, let's say $500 or $300 a month for the 2 years that I pay you as help to help me pay for the house that I'm buying from you 2 years later. That may be a way how the seller may motivate you and give you the money to help you buy the house 2 years later. And this is going to be a win-win situation for them, because they want to sell the house and you want to buy the house. So that's a way to be able to negotiate some money back to you to help you buy the house 2 years later. But this is going to be changing case to case, seller from seller, buyer from buyer. For that reason, whenever you're ready to buy a house, whether it's a first-time home buy, or you want to buy a house that you've been out of the housing loop and basically you're getting ready to go back to being a homeowner, but you don't have no credit and you cannot buy a house because of the reason, give me a call. Let's do a consultation about your particular situation. Let me give you the type of answers that you need to hear right now. And if it's not a possibility for you to buy a home, at least I'm going to give you a path for you to be able to get to that point and give you the call that you need to get to, so you can focus between you and your family to making sure you get to that point so you can finally buy a home on your own. My name is Fernando Herboso with Maxus Realty Group. Thank you for coming to our show.